Hey guys, what is up? I hope you're having an amazing day today. I am excited for today's video because we're going to be talking about 3 stocks that are trading for below $70. And we're going to be breaking down this video into 4 parts. That is, who is this company, their products, financials, and opportunity. And always remember, you guys, I am not a financial advisor. I am not telling you how or where to invest your money. That is for you to do your own due diligence with these companies and stocks. These 3 companies, you guys, have been performing so well the past 6 months, which is why I'm excited to talk to you guys about them in this video today. So let's get right into the video. The first company we're talking about today is GOGO Incorporated, ticker symbol GOGO. GOGO gives air travelers the freedom to be entertained or work more productively, connect air crews in new ways for better service and safer operations, and employ innovative technologies to talk to the airplanes themselves to deliver higher performance and cost savings. For more than 20 years, GOGO has been synonymous with better ways of connecting in flight. GOGO is currently trading for $10.49. They are down 1.41%. Pointing to the 6-month chart, we can see that GOGO is up 520%. That is insane. GOGO currently serves commercial airlines in over 80 countries, such as Air Canada, American Airlines, Delta, United, Air France, and more. Not only do they cater to commercial aviation, but also to business aviation and for passengers as well. Because I'm not wanting this video to be too long, I will be going over 2 products of GOGO. For commercial aviation, there is the 5G GOGO product. GOGO 5G, the smallest and lightest, most economical solution for commercial regional jets and smaller mainline jets operating within the United States and Canada. With GOGO 5G, you get multi-carrier LTE signal that enables more bandwidth, dedicated aviation frequency to reduce signal noise, redundancy and resilient licensed spectrum capacity over urban areas for uninterrupted connectivity, lower latency to replicate the in-home connectivity experience. For their business aviation, they have their advanced platform. GOGO advanced systems are way beyond traditional LRUs. They are fully integrated platform solutions that give you the power to transform your entire in-flight experience and leverage every digital opportunity possible in the cabin, cockpit, and your operations. Now, as for passengers, there are the internet passes and subscription plans for participating airlines. Taking a look at how GOGO performed the first half of 2020, we can see that they have not been performing too well because of COVID-19. Since their line of business is within the airline industry, therefore they plunged along with them at the start of the pandemic. Their revenue was down about 55% from June of last year till now, and their net loss plunged about $70,000. However, on the bright side of things, GOGO's total current assets are sitting at $390 million, and their total current liabilities are sitting at $291 million, with a solid current ratio of 1.3. Obviously, recovery is going to be taking some time, as airlines are slowly recovering. If we take a look at this article, it states, after an initial boost in traffic in May and June following the worst of the pandemic's effects on airlines, traffic has flattened and the recovery has slowed dramatically. Hopes for a robust holiday flying season are diminishing as airlines/holiday travel schedules. It could be spring break nearly 6 months from now before airlines truly see whether passengers come back in large numbers. So it is a waiting game as of right now. However, it looks like there is a light at the end of the tunnel for GOGO. Their commercial aviation line of business has been recently acquired by Intelsat, which is the largest satellite company in the world. Intelsat purchased GOGO's commercial aviation for $400 million in cash. But it is odd because of the fact that Intelsat recently filed for Chapter 11 bankruptcy back in May. However, it is said that the bankruptcy was seen as a means for Intelsat to begin paying down its nearly $15 billion debt load while positioning itself to participate in a Federal Communications Commission spectrum clearing program. Plus, this acquisition could be that in-flight Wi-Fi sees a major boost in quality and reliability, offering a living room experience, and you just might get it for free. The key here is shifting from the ground-based system to one that uses satellites. GOGO was already working with airlines to retrofit aircraft with high-speed 2Ku antennas. Thanks to the acquisition, that system, once complete, will have the direct backing of Intelsat's vast satellite network. As for GOGO, they will still be working their business aviation, and that will be their main focus. GOGO will keep its business aviation sector and use the proceeds of the sale to reduce its $1.2 billion debt and expand a 5G system that will boost the ability of current air-to-ground networks on which business and smaller commercial aircraft depend. So with the benefit of this acquisition, things seem like they can turn out for the better for GOGO, which is why you should keep your eye out on this stock. The second pick is a company called LivePerson Inc, ticker symbol LPSN. LivePerson is a company that provides conversational AI solutions for businesses. LivePerson makes life easier for people and brands everywhere through trusted conversational AI. We empower brands to give customers better experiences through AI-powered messaging instead of forcing them to waste time on hold or crawling through websites. At the time of this video, LivePerson Inc is trading at $59.50, up 0.73%. And if we take a look at the 6-month chart, we can see that they are up 162% and they are doing relatively well. They serve industries such as banking, retail, government, telecom, and more. Companies who have been using LivePerson have seen a 20% boost in customer satisfaction, 2 times uptick in employee efficiency, 90% automation containment rates, 20% increase in online sales conversions, and 50% decrease in agent attrition rates. LivePerson offers products such as a conversational builder, and with this product you can create automated conversations with pre-built conversation templates with responses and questions like these. Another product they offer is their conversational analytics. With conversation analytics, it's easy to identify conversations that convert to sales along with their average order value, and for offline businesses, tracking lead conversion is seamless. In my opinion, this is all very cool and innovative. Their revenue increased to $169 million in June 2020 from $137 million in June 2019. If we look at their loss from operations, it has increased to almost $9 million, as they have increased their spending on product development, which is okay for a growing company as it is expected to create new products and expand within these types of companies. Their total current assets are sitting at $267 million, and their total current liabilities are at $175 million, with a nice current ratio of 1.5. It seems that hedge funds are bullish and buying back into LivePerson recently. LivePerson was in 23 hedge funds portfolios at the end of the second quarter of 2020. The all-time high for the statistics is 23. This means the bullish number of hedge fund positions in this stock currently sits at its all-time high. Now for the third pick, which I'm excited to be talking about, is Marvell Technologies, ticker symbol MRVL. Marvell Technology moves, stores, processes, and secures the world's data with semiconductor solutions designed for their customers' current needs and future ambitions. Through a process of deep collaboration and transparency, they're ultimately changing the way tomorrow's enterprise, cloud, automotive, and carrier markets transform for the better. Marvell Technology is trading for $41.90 during the time of this video, up 0.12%. And this is a very attractive, reasonable share price compared to other semiconductor companies. And in my opinion, I expect it to rise even more in the next few years, possibly the next few months. If we look at the year to date, we can see during the time they dropped at the height of the pandemic to $17.25, and how they started to rise, and now they are up 143%. They are so diverse in the fact that they cater to not one, but 4 different markets, and that leaves them so much opportunity for their services and products. The total addressable market for semiconductor infrastructure is at $140 billion with a compound annual growth rate of 6%. And then you have Marvell's total addressable market sitting at $110 billion with a 6% compound annual growth rate. Their serviceable available market is expected to rise to $20 billion in 2023 with a 9% compound annual growth rate. Marvell's products range from different needs and services, such as compute, networking, storage, and custom products. Going over 2 of their products, there is the automotive Ethernet products. With Ethernet PHY transceivers and switches supporting speeds from 100 megabits per second to 10 gigabits per second with enhanced safety and security features required for today's and tomorrow's in-vehicle networks. And this is a huge sector they service to, as the automotive Ethernet market is expected to grow from $1.6 billion in 2019 to $4.4 billion by 2024 at a compound annual growth rate of 21.7%. Another product they offer is their QLogic Fiber Channel. Best-in-class performance and functionality for storage area networks designed for server deployment and orchestration. The availability of multiple ports with concurrent FCP and FCNVMe configurations enable optimal flexibility. Marvell QLogic FC technology is trusted by global Fortune 1000 enterprises. It is a lot of technical terms, but to simply lay it out for you, a fiber channel is a high-speed networking piece of technology that is used for conveying data throughout computer servers, data centers, and more. For the 3 months ended, Marvell's revenue increased to $727 million August of this year from $656 million August in 2019. And you can see their gross profit increased as well to $359 million this year from $350 million in 2019 for the month of August. Now their loss from operations increased dramatically to $151 million, as most of the costs came from restructured related charges of $120 million compared to August 2019 of $16 million. And the reason for this huge increase is because they made changes to the scope of their server processor product line in response to changes in the associated market. They are transitioning their product offering from standard server processors to the broad server market to focus only on customized server processors for a few targeted customers. Marvell's total current assets are sitting at $1,632,087,000, and their total current liabilities are at $1,224,830,000, with a current ratio of 1.3. In my opinion, there is massive opportunity for Marvell, and it is looking fantastic. The company outlined strong long-term growth targets at its virtual Investor Day event. Marvell now expects to deliver revenue growth of 10% to 15% over the long term compared to its previous target of 6% to 8%. The semiconductor company anticipates its top line to benefit primarily from opportunities in 5G, cloud, and automotive markets. Marvell also has some new products rolling out in about a year. They partnered with TSMC to develop a new portfolio of chips based on its 5nm process for a wide range of areas from data centers to 5G network infrastructure. Marvell said TSMC's 5nm technology can improve the performance of its products up to 20% and reduce power usage by up to 40% compared with TSMC's 7nm node, which was released in 2018. Marvell Technology has long-term partnerships with Samsung and Nokia, and this is definitely leveling them up in the 5G world. Marvell also recently rolled out its new Octeon Fusion family of chips to handle the throughput of latency of 5G networks, which supports far faster data transfers than 4G networks. The company is gaining ground in the telecom equipment market after it partnered with Nokia, which accounts for around 20% of the total market, to roll out a custom-designed chip with Octeon Fusion IP inside. Marvell, which is battling Intel and Broadcom in the 5G market, is also selling chips to Samsung. This is all great opportunity for Marvell and their growth, especially in the very hot 5G market. Well, that brings us towards the end of this video, you guys. If you enjoyed this video as much as I did, please don't forget to hit that like button and subscribe button. Also, don't forget to hit that bell button for more notifications every time I upload a new video. I hope you all enjoyed these 3 stock picks, and I hope you found value in any way with this video. Comment down below which stock you'll be eyeing from this list. With that being said, I will see you guys next video. Peace.